So we're going to look at metrics. Every time I get asked a question about a bubble, I'm going to reference two metrics. I'm going to reference where is our pricing today versus where it should be, right? Where is our pricing today versus what that median projected home sales price says we should be? I'm going to look there. That doesn't tell every bit of the answer. That is not saying that when we go above the line, which we just have gone above the line, that doesn't mean that you're going to have a real estate crash, right? That's a data point that just shows you that over time, we should probably see slightly lower than 4.3% appreciation. That's all that means, right? So I'm going to look at that data point. Now, at the same time, that's that macro outlook. At the same time, I'm sitting here telling you that I've never been more confident that home prices are going to go up over the next year, right? So if we're talking macro, this means that over time, we're going to get back to that norm, right? That 4.3% norm. Mm-hmm. If you're above the line, over the next 20 years, you're probably going to see slightly lower than 4.3% or somewhere around there, right? We're kind of splitting hairs here. So that's one data point. The next data point is months of inventory. Months of inventory is going to tell you what's going to happen in the short run. So the graph that we just looked at is what we're talking about over the long run. Months of inventory is going to tell you what's going to happen over the short run. And then we're going to make the best decision, and we're going to help you make the best decision taking that information in, as well as a lot of other data and conversations and knowledge and experience and all that good stuff. But it's going to come down to those two data points. And right now, those two data points are showing us that we expect higher than normal home price appreciation over the next 12 months. And over the long haul, your pricing is right where it should be.
There you go. So a couple more data points. So higher than average home price appreciation, short run, long run, you're right on pace, right? So it seems like upside with limited downside, which is kind of like the beauty of this asset class, if I'm not mistaken.
Yeah, exactly.
And then the other data points that we have for the short run stuff, we just popped this up on the screen. We got June 2020, the median price sold was 255,000. June 2021, median price sold is 300,000. That's the first time it's happening in Jacksonville, right? Median home price above 300,000. Homes at the same time, the homes on the market have almost halved from June 2020 at 7,400 to June 2021 at 4,264. The home sales have gone up from 3,155 to 3,631. Months of inventory has gone down from the stat that you just talked about in the short run, from 2.35 months of inventory to 1.17 months of inventory. And the year over year appreciation from June 2020 of 4.2, which is at the historical average, to June 2021 has gone from 4.2 to 15.7%. So all trends pointing towards this is the beginning of this acceleration cycle that will then at some point taper off into the long term trend. But right now, the going's good short run.
Mm-hmm. You nailed it, man. When you see months of inventory, and all those numbers, of course, are really important. Most people focus on the pricing. What we focus on is months of inventory, because if you nail an understanding of months of inventory, you are going to have a 6 to 12 months heads up as far as what pricing will be. So this is why when COVID broke in March of 2020, for those who were the early veterans of the Not Your Average Investor show, you'll remember me saying, I do not expect home prices to go down. Even though I don't know what the heck is going on in the world right now, I don't see home prices going down. It's because the months of inventory metric was way low. If you're below 6 months of inventory, that's an indicator that you're going to see higher than normal home price appreciation. And I had never seen it at 2.35 months of inventory back in June. And so I didn't know what was going on, but I did the math, and I just didn't think that overall house buying was going to just completely be obliterated. I thought that in order for us to maintain, 2, 3, 4, 5, 6 months of inventory, you needed, I just didn't see all the home sales going away. So it was really easy for me to look at the numbers and predict that home prices were definitely not going to drop. Now, I didn't say that they were going to appreciate by 15%. So I'm not that good.
You're not that good, man. But you were, I mean, that was kind of a watershed moment for us, right? Like we were still pretty new in this whole like having the platform and having a stage. And you're like, man, I don't know. I remember
I was
you
scared about
telling me,
saying it.
yeah, you were scared, man. I remember you telling me to go back into the past video and be like, hey, man, do you think we should like clip that out? I was like, no, dude, let's just let that thing play and
Yeah.
let's see if you're right or wrong. And we'll use it accordingly. And, in a time where everybody didn't know what was going on, you stuck to that statistic. So I just want to say that that's a really good way of putting it. Most people focus on price. We focus on months of inventory because that's what it was, right? Like it was knowing that that's the driving statistic.